Hi guys, welcome back to my channel. Hope you guys are doing really well. If this is your first time here, I'm Lindy Peters and I'm a financial coach, here to help you plan for a brighter future and help you make more of your hard-earned pennies with budgeting, saving, motivation and guidance. Just a disclaimer, I am not a financial advisor, I'm just a financial coach. So please make sure you always do your own stock research before you invest your money. I'm just sharing my opinion and my investment journey with you, but I'm not a professional investor. So today we are going to have a look at my Trading 212 portfolio. Now I started this portfolio on the 13th of July and I've already received dividends for all the stocks I bought in the beginning. Now if we go all the way down, you will see on the 3rd of August I received my first dividends, and that was for LTC Properties, and I received 12 pence for that. Now on the dividends for Main Street Capital, I received 25 pence. Now that was for 1 and a bit share, because I had a partial share of that one. And then we've got the Realty Income, I received 15 pence. Pembina dividends, I've received 21 pence. Now I had 2 shares for that to start off with. And then Stag Industrial, I received 8 pence. So that gives me a total of 81 pence for my first month of dividend. Now I've got all these extra stocks, so next month I will be receiving over £1. I've also invested another £500 into my portfolio because I was so shocked with the amount of dividends I've received. I know 81 pence is not a lot of money, but if you look at 81 pence from stocks that I've bought for £180, I think that is quite a good return. If you think after a year of saving £2,000 in my daughter's savings account, she only received £13. I definitely think this is a great start for my portfolio. So the £500 that I've deposited into my account, the first shares that I bought with this is Altria Group, which is a MO ticker symbol. Now, as you can see at the moment, they are at a bit of a low, which is actually a great time to buy stocks because you don't want to be buying at the high point, you want to be buying at the lower points. Now, if you have a look at the dividends, because that's the main reason I'm buying my stocks at the moment, the dividend yield is 7.86%. Now that gives you a payout of $3.44 every year. Now they have a dividend growth of 17 years, but they have been paying dividends for over 31 years. Now that is, I'll show you now why that is only for 17 years and they pay out quarterly. Now if you have a look at the dividend growth, you can see over the last year, it's 4.32% that it's gone up with. Over the last 3 years, it's 11.75% that the dividends has gone up with. And over a 5-year period, it's 10.40%. Now, the reason why it's only a 17-year growth is because in 2003 they had a bit of a dip in their dividends, but they have been paying dividends for a lot longer than the 17 years. And as you can see, even in the recession in 2008, they didn't stop paying their dividends and it still kept on going upwards. So in my opinion, this looks like a rather safe company. If you look at the dividend safety, you will see the payout ratio is 80%. Now the cash to dividend pay ratio is 61%, which is really safe because they do give themselves a little bit of a gap. And their long-term debt is only 45%. So I think this looks like a really great safe company to invest in. So please make sure you do your own research on this company as well. So I'll be buying 4 shares of this specific stock. Now the next stock will be Pembina. Now I've already bought Pembina stocks before. I'll be buying another 2 shares. I'll link the video on top for you if you would like some more information on that one. And the next one, I'll be buying some more of the Main Street Capital as well. I'm going to be buying 2 more shares. I link the Main Street Capital for you in the top as well. If you're getting value so far, please give me a thumbs up to let me know, and make sure you subscribe to the channel so you don't miss out on any of my new videos. Now the next stock I'll be buying is AT&T. Now as you can see, they've been growing a lot, but with the coronavirus they've come down quite a lot, so I think it's a great time to buy shares at the moment before it shoots back up to where it used to be. Now if you have a look at the dividend growth, you will see they are paying 6.96%. That gives you an annual payout of $2.08. They've been having a dividend growth for 25 years, so that makes it a very safe company. They pay out quarterly. Now if we have a look at the dividend growth, you will see for over the last year it's 1.97%, over the last 3 years it's 2.4%, over the last 5 years it's 2.9%. So their growth keeps going up, which is a good indicator of it being a safe company, because even in 2008 with a big recession they still continued to grow and not go backwards. If we have a look at the dividend safety, you'll see the payout ratio is 65.6%. Their cash dividend payout is 57.75%, and they only have 24.74 long-term debt, which means they don't even spend the whole 100%, which gives them a bit of leg room for if anything goes wrong. So in my opinion, this is another safe company to invest in, and I will be buying 4 shares of this company this month. Now the last one that we will be looking at today is Johnson & Johnson's. Now they've been around for a very long time, and they've got their fingers in so many pies. As you know, they've got baby stuff, beauty products, and at the moment they are trying to get the vaccinations ready for coronavirus. So if they get that crack, they will be definitely growing in my opinion. So let's have a look at their dividends. Now, as you can see, they are only paying 2.64% in dividends, but that gives you $4.04 every year. They've been paying dividends for 31 years in a row, and they pay quarterly. Now if we have a look at their dividend growth, you will see in the last year they've gone up by 5.95. In the last 3 years it's 5.98. Over the last 5 years it's 6.32. So they keep growing over the last few years. As you can see, the dividends keeps growing, which is great. And safety. So they've got a payout ratio of 51%. Now their cash dividend to payout ratios is 58%, which is great as well, because it means they've got fallback space. Now if you have a look at the long-term debt, they only have 3.74%, which in my opinion means it's really safe, because there's a very big gap that they've got on leeway. It's actually over 30% that they've got on leeway, which is really great for any company to have that type of fallback. So in my opinion, this is a really safe company, and I will be buying 1 share of this. I bought Johnson & Johnson's 1 share, Main Capital 2 shares, Pembina 2 shares, AT&T 4 shares, and the Altria Group 4 shares. Now that means I still have £84.71 left of my £500, which I'll be looking into Virgin Galactic to be buying, but I will be sharing more about that in Virgin Galactic in a future video. But if you have a look, Main Street Capital and Pembina, they pay out every single month in dividends, so that gives me a nicely monthly income. But the other 3 shares, Johnson & Johnson's, AT&T and Altria Group, they pay out in different months, so together those 3 will help me get a monthly income as well, because first you'll get Altria Group, then AT&T, then Johnson & Johnson's, and then they start again from scratch. So that will help me grow my dividends on a monthly basis as well. I'll leave a link in the description below if you would like to give me a call to discuss any of the topics in my videos. If you found this video helpful, please give me a thumbs up to let me know, and make sure that you subscribe and ring the bell so you don't miss out on any of my future videos. If you've got any topic requests or any questions for me, please comment below and I'll get back to you personally. Have a lovely day, guys. Bye.